The US dollar, the world's most dominant and trusted currency, could soon lose its status and power to another currency. Well, according to Jim Rogers, a renowned investor and financial commentator who has some bold and controversial predictions about money, we will explore Jim Rogers' views on the US dollar, the Chinese yuan, and the global currency market. We will also discuss the implications and opportunities for investors who want to diversify their portfolios and hedge their risks. So stay tuned. Rogers criticizes the US taxation system, which he considers unfair and oppressive for US citizens living abroad. He says that, unlike many other countries, the US requires its citizens to pay taxes on their worldwide income, regardless of where they reside or earn their money. This means that US expatriates have to deal with complex tax rules, double taxation, and reporting obligations that can limit their financial freedom and opportunities. He says that this system discourages Americans from exploring the world and investing in other markets and encourages them to renounce their citizenship. Rogers argues that renouncing his US citizenship was a rational decision, not only for tax reasons but also for personal and family reasons. He says that he renounced his US citizenship in 2008 and became a citizen of Singapore, where he moved in 2007. He says that he chose Singapore because of its stable and business-friendly environment, its strategic location in Asia, and its multicultural and multilingual society. He says that he wanted to expose his children to different cultures and languages and to prepare them for future opportunities in Asia. He says that he also wanted to avoid the hassle and cost of complying with the US tax laws, which he says are outdated and unfair. Rogers praises the benefits of becoming a Singapore citizen, which include holding a Singapore passport, which has visa-free or visa-on-arrival access to 189 countries and territories, and enjoying subsidies on education, healthcare, housing, and employment. He says that as a Singapore citizen, he has more security, mobility, and access to different countries and regions. He says that he also has more incentives and support from the Singapore government, which he says is efficient and transparent. Rogers acknowledges the drawbacks of becoming a Singaporean citizen, which include having to renounce his other citizenships, as Singapore does not allow dual or multiple citizenships. He says that this was a difficult decision, as he had to give up his ties and rights to his birth country. He says that he also had to accept the liability of national service for his male children, which he says is a mandatory duty for all male Singapore citizens and permanent residents. He says that he respects Singaporean law and culture, and that he is willing to contribute to the country that has welcomed him and his family. Rogers predicts the decline of the US dollar, which he says has been losing its value and dominance as the world's reserve currency. He says that the US dollar is facing various challenges and pressures such as rising debt, inflation, trade deficits, and geopolitical tensions. He says that the US dollar is losing its appeal and credibility as a haven and a store of value for international investors and traders. He says that the US dollar is also losing its influence and power as a tool for economic and political leverage and sanctions. He considers the Chinese yuan to be a potential contender to challenge the US dollar due to China's economic growth, trade surplus, and increasing influence in the global arena. He says that the Chinese yuan is undervalued and has a lot of potential to appreciate and become more widely used and accepted. He says that the Chinese yuan is backed by a strong and resilient economy, which is the second largest in the world and the largest trading partner for many countries. He says that the Chinese yuan is also supported by a large and growing foreign exchange reserve, which is the largest in the world and consists of various currencies and assets. He says that the Chinese yuan is also gaining more recognition and acceptance as a payment and settlement currency, as well as a reserve and investment currency by various countries and institutions. However, he notes that the Chinese yuan's restricted convertibility hinders its immediate competitiveness, as it is not fully convertible into other currencies and is subject to capital controls and regulations by the Chinese government. He says that the Chinese yuan is not freely traded and accessible in the global currency market, and that market forces do not determine its exchange rate but by the intervention and manipulation of the Chinese central bank. He says that the Chinese yuan is not fully integrated and aligned with the international financial system, and that it faces various barriers and restrictions in terms of cross-border flows and transactions. He says that the Chinese yuan needs to become more freely traded and accessible in order to gain more trust and confidence from international investors and markets. He says that the Chinese yuan needs to become more convertible and flexible, and that its exchange rate needs to reflect its true value and market demand. He says that the Chinese yuan needs to become more integrated and aligned with the international financial system, and that it needs to comply with global standards and rules. He says that the Chinese yuan needs to become more transparent and accountable, and that it needs to enhance its governance and supervision. He also says that the Chinese government needs to implement more reforms and open up its economy and financial system to allow more transparency and competition. He says that the Chinese government needs to reduce its intervention and control over the currency market, and that it needs to allow more market forces and mechanisms to determine the exchange rate and the allocation of resources. He says that the Chinese government needs to relax its capital controls and regulations, and that it needs to facilitate more cross-border flows and transactions of the yuan. He says that the Chinese government needs to improve its legal and regulatory framework, and that it needs to protect the rights and interests of investors and traders. He says that the BRICS countries have different economic models, political systems, and regional agendas, and that they face various challenges and problems in their own domestic and external affairs. He says that the BRICS countries are not likely to cooperate effectively or coordinate their policies on major global issues such as trade, security, or climate change. He also says that the BRICS countries are not able to challenge or replace the existing international order, which the US and its allies still dominate. He argues that the BRICS alliance is based on a weak foundation, as it lacks a clear vision, a common identity, and a shared strategy. He says that the BRICS countries have divergent interests and priorities, and that they often compete or conflict with each other on various matters. He says that the BRICS countries have different levels of development and performance, and that they have different expectations and demands from the alliance. He says that the BRICS countries have limited influence and leverage in the global arena, and that they face resistance and opposition from the established powers. He says that Uzbekistan is a landlocked country in Central Asia, which has abundant mineral and energy resources such as gold, uranium, natural gas, and oil. He says that Uzbekistan is undergoing a process of economic liberalization and reform, which aims to improve its business environment, attract foreign investment, and diversify its economy. He says that Uzbekistan has a strategic location and a large population, which can facilitate its integration and cooperation with its neighboring countries and regions, such as China, Russia, and the Middle East. He praises the efforts and achievements of the Uzbek government, which he says has implemented various measures and initiatives to open up and modernize the country. The Uzbek government has also fostered a more conducive and competitive environment for business and innovation, and supported the development of various sectors and industries such as tourism, agriculture, manufacturing, and services. He recommends investing in Uzbekistan, which he says has a lot of potential and opportunities for growth and profitability. He says that Uzbekistan has a large and untapped market which offers a high demand and a low supply for various goods and services. He says that Uzbekistan has a rich and diverse natural resource base, which provides a competitive edge and a comparative advantage for various industries and activities. He says that Uzbekistan has a favorable and friendly investment climate, which offers various incentives and benefits for foreign investors, such as tax breaks, subsidies, guarantees, and protections. He says that Uzbekistan has a skilled and educated workforce, which offers a high quality and a low cost for labor and human capital. He advises investing in Colombia, which he says has a lot of potential and opportunities for growth and profitability. He says that Colombia has a large and growing market, which offers a high demand and a diversified supply of various goods and services. He says that Colombia has a rich and varied natural resource base, which provides a competitive edge and a comparative advantage for various industries and activities, and has a skilled and educated workforce, which offers a high quality and a reasonable cost for labor and human capital. So, what do you think? Will the Chinese yuan supersede the US dollar as the world's reserve currency? Or will the US dollar maintain its dominance and power in the global currency market? And how will this affect your investment decisions and strategies? Let us know your thoughts and opinions in the comment section below. And if you enjoyed this video, please give it a thumbs up, share it with your friends, and subscribe to our channel for more.